I've seen people blow hundreds of thousands of dollars on just one deal. They have literally bought a six-figure business, and within months, the business was not making any money. How is this even possible? Well, people make mistakes. They back themselves too much in some of the most risky scenarios. And, then I've seen people make seven figures and more by acquiring a business mistake-free, zero margin for error. So if you appreciate me sharing with you the difference between what costs people a lot of money in mistakes acquiring businesses compared to the sound investors who absolutely crush it, please share some love with me by clicking the like button. It means a lot. I really do appreciate it. Now, all of these mistakes that people make when acquiring a business, they're quite fatal, but the last one is a massive paradox, and you would never guess it if I didn't tell you. So don't fool yourself with advice. This is huge, and we'll get to that one in a second. But the first mistake people really make that I see is expectations, which is scary. Typically they see someone buy a business in say 3 months and want to do the same. There's conditioning. Like, normally content's great, right? So I'm going to bag out a bit of content here. Even, sometimes my things, some things on my YouTube channel, let's just be real. Let's be realistic about it. Sometimes you'll see a video or listen to a podcast of mine where people have achieved a certain result, and then you set a level of expectation that if they can do it, then you can do it. Or maybe you listen to some other podcast or YouTube channels, or hear some story that somebody went from zero money to X amount of money and bought a business zero money down, and then, scaled it into a multi-million-dollar business. Now, the reality is you've gotten the bite-sized success story of them, and you probably don't know where they're at in their life and what sort of resources they have and what sort of things they got going on in their life. You pretty much know nothing about the person and how much time they even spent doing the work typically, or what their life looks like before and during buying the business. Now, I'm going to compare two different people. Say somebody that is a full-time parent with 2 kids, has a full-time job, and also has a life, and wants to spend time with their kids, and their work is pretty stressed, and maybe they're earning, $100K a year, right? Say, for example, that person compared to somebody and maybe they're between 30 and 40. That type of person compared to somebody that's maybe, say, between 40 or 50 that did have a really high-level career, and they don't have children, and they've got a partner, and they've semi-retired, and they probably spend 10 hours, 15 hours a week working. They can do so many more things in a shorter period of time because they have a lot more time. So then the next thing is that people might start calculating time as a unit of measurement, which I think time is one of the most inaccurate units of measurement for achieving results. It's not about how much time you put into something alone. It's more about the inputs. For example, I've said this before with due diligence and buying a business. Say, for example, you have this type of business that you want to buy, and then you go away and you start looking for the business, and you expect to buy the business after looking at maybe 3 or 4, 5 due diligences. Let's say 5. Now, typically, you're not going to know the market very well because you've only looked at 5 businesses versus somebody that's looked at far more businesses. Now, what it might take you in terms of time is to look at 5 businesses and do due diligence on 5 businesses. It might literally take you 5 weeks to do so. If you're spending your time it takes you like 1 week to do a due diligence because you got other things going on in your life. Whereas somebody that I mentioned before, that might be between 40 to 50 and they've had a great career, they're semi-retired, and they have a lot more time on their hands, they might be able to do 3 due diligences a week, and within 2 weeks they've got 6 DDs done, and they know the market better than you within 2 weeks compared to 5 weeks. So time is an inaccurate unit of measurement. It's about the inputs, how many businesses you look at, how long it takes you to do due diligence is a form of time measurements for yourself. So you have that as well. So don't measure time has set a time expectation on yourself. This is a good way to fail in any sort of goal when you think about it in your life. Even, if you want to achieve, lose 10 kilograms, then setting a time pressure is not the best way to go, or a timestamp is not the best way to go, because what happens if you get to wanting to lose 10 kilograms in 10 weeks and in 10 weeks you get to 7 kilograms lost? Are you going to say you failed? Absolutely not. Like, it's stupid to say that. Why don't you just keep going with the protocol for another 3 weeks to get that 10 kilo lost? That's an easier way to think about it. But with the losing the weight, it's not about the time. of 10 weeks. It's about how many times did you work out during those weeks, and what were the workouts? How long do they go for? How intense were they? It's about the inputs. So it's one thing about expectations. Don't expect to be achieving things within a certain period of time. Expect to achieve things through inputs mostly if you are going to make a level of expectation. The next expectation is business models and acquiring a specific type of business. I'll give you an example. I just bought a commercial property, and when I first started looking to buy the commercial property, my strategy was to buy a larger commercial property, almost double the size that I actually acquired. And I went 9 months to try and find that, and I couldn't really find that type of real estate. And so I had that expectation, but I was also fluid to changing my strategy. And if it didn't change my strategy, I just would have run away and probably gone and tried something else, which is just stupid because I've learned so much in the space of real estate. And same with you. If you're trying to buy a specific type of business model for a specific price based on something you've heard or an expectation you've set for yourself, try to be fluid, because you can still buy a great business. Maybe not exactly the business model you want that is earning the exactly amount of money, but you can still be successful doing it and start at a different starting point. Evolve, and don't set an expectation that is a limiting belief towards your success. Really, really big. Next thing I want to talk about is how much work is involved. Now, this is where people fail as well. I alluded to it before, but it's not like you're just going to, when you go buy a business, it's not like you're just going to go and pluck, something off the shelf at a supermarket, put it in your basket and go away and buy it. There's a lot of decisions to be made first to get your finances sorted, to work out what sort of business model you want to get. Also change your strategy as the market changes, be fluid with it and change your approach. I'm going to talk about advice and all that sort of stuff soon, but there's a lot of work involved with buying a business. And if you set an expectation for yourself to do it in a short period of time, typically you're setting yourself up for failure. Give yourself not time, make inputs, right? Maybe get to a point where you're doing like 20 due diligences on 20 businesses, and then you get to know the market really, really well. And do that 20 due diligences on those one type of business model in that price range, that price bracket for your acquisition strategy. And then you get to know that very specific market. That's very, very important. So there's quite a lot of work involved in acquiring a business. If you think about it, it should be the analogy, if you're going to chop a tree down, spend 90% of your time sharpening the axe, the preparation, and then the 10% is, chopping. So it's the same with buying a business. There's so much preparation to get your finances in order, to find the business, and then the buying of it, like sending the money across, is just like the smallest minute portion of it. So there's a lot of work involved. And when you do this, it might take you maybe 3 or 6 months. It might take you a year. It might take you 2 years. But so what if it takes you 2 or 3 years, maybe even 4 years? If it's going to be a business that's going to be the start of changing your life, like the pinpoint of you changing your life dramatically, is it worth 4 years? Absolutely. I'll give you an example as well. I spent 2 years trying to start online businesses and failed. And then I bought an online business in the year 3, and I bought another one in year 4. And only then it took me 4 years to get to a point where I was close to replacing my income. After maybe just over 4 years, I was able to replace my income. You got to realize that I'm a bit of a crazy person in terms of work ethic as well. And I was single. I was working a lot of hours in my supervisor's job as a plumber. But yeah, I didn't really have many responsibilities in that time period. And I was a lot younger. I had that young person fire, ambition, and fire in the belly type energy towards this. So you got to realize that there's a fair bit of work involved, but it's worth it if you're thinking about time frames. If it takes you a little bit longer than you expect, I believe it's worth it. So don't just set an expectation based on how much work is involved without knowing how much work is involved. The third big mistake is that people do not know the value of relationships, which is a massive failure. Some people treat this purely as a logical decision and keep it very, very transactional, keep it very plain, very vanilla, to the point, robot style. But half the battle when you're buying a business is building trust with the seller. Maybe even more of a battle, right? To get you across the line, maybe it's more than half. And how do you build trust with a seller? You build trust through a relationship. Think about it. Who do you trust most in your life? It's the people that you spend the most amount of time with, right? And you've been through some challenges that you have the strongest relationships with. Now, you want to have a seller trust you that you're going to be able to be the person that can take the business to where they couldn't take it, or look after the business and make sure the staff are looked after as you grow the business. Or, you don't just buy the business, fire the staff, and just make it a Frankenstein business. So when you're not really sharing things about your life, through calls and you're making it very transactional, there's nothing for the person or the seller to grab onto. For example, have you ever noticed in your life there's people that you just cannot connect with? For example, you ask them how they are and everything's perfect, everything's good, everything's always rosy, and they don't really go into depth about any of maybe their insecurities or their vulnerabilities or anything like that, which means there's nothing to really grow to grab onto and connect and discuss person to person and be open about it. So people connect through emotions really, and when you're being vulnerable, you have your emotions out there. And if you think about it, when you're younger and you're at a party, you connected when you were having a connection with somebody that was really, really strong. It's because they were sharing something that was like heavy on their chest, and that brought that out in you to share something that was heavy on your chest. And you had this, what we called a DNM, right? A deep and meaningful connection and relationship. And how you can do that through when you're buying a business is you don't have to go and just spill the beans on how crappy your life is at the moment or the challenges you faced, but at least have an open conversation and share some things about your humanness, and you're not being just perfect and not really just being plain Jane or G.I. Joe style, right? So when you're trying to buy the business, there's a lot of competition. Typically, it's not just the offer and the amount that the buyer is willing to put on the line. It's also about offers compared to who is behind the offer and who is going to do the business justice. There's been people, and this happens a lot. Sellers will take less money for a business because they trust somebody else over a higher offer, because that person is more trustworthy and they're going to do what they think is right for the business. So they go with that person over money. So a very, very important thing to understand is the value of relationships and building relationships. And this is a long-term thing as well. It's a long-term game. Play long-term games with long-term people. And the more you can start to build a relationship with one seller, the more you can do it with other sellers. Versus the complete other side, if you're not building relationships and you're transactional and you're coming in with higher bids, people are just going to go, well, I don't want to deal with this person next time I sell a business. And it's going to be known that you've built a bad reputation. On the opposite side, build a great reputation through great relationship building. I'm also going to add to that building relationships isn't just good for the transaction and the space of buying businesses. It's really good for being in business. If you think about it, business is relationships, and the better you can build relationships, typically with better people, moving forwards, the better you're going to be in business. Very, very important. There is a good book to read. It's called How to Win Friends and Influence People by Dale Carnegie. If you haven't read that, consider it. Another failing mistake is perceiving that you need to know the niche or need to know about the niche or have skills to run the business. Guys, you've been lied to. It's all a fallacy that you need to have the skills to run the business that you're acquiring, or that you need to know the niche of the business that you're acquiring. What you do need is to know the business, how it works and how it scales. That's it. You need to know how it works and how it scales. And you can have an advisor help you with that as well if you don't. Everything else can be hired out, like I said, and pretty cheaply as well. I'll give you an example. My second business I bought was a suit business. We sell tailor-made garments to people for corporate jobs. I've never been in a corporate job, and for weddings. I've been to a wedding, but I've never been married. And I knew nothing about suits. I knew nothing about shirts and tailored garments or anything like that. Also, I really didn't know a whole lot about digital marketing and ads when I bought that business. But I was able to get somebody that helped me, who was an advisor. And I also learned as I went through it. And I knew how I could grow the business. I knew I was going to work it out. I didn't know when I bought the business, but I knew I was going to be able to work it out. And if you don't know how to scale the business, then you can also get help in hiring that as well. So important to understand that the second business, the suit business, I got 100% return on that business in 7 months. And everything else would profit from here on in. I also worked out that people were ordering online and they had just a terrible ordering process. So I built out a self-building tool to build your own garments on the website. I didn't do it. I got a developer to do it, and that actually helped grow the business as well. And then we started doing social media stuff and ads and all that sort of stuff. And I didn't really grow the business. I learned from the person that was doing customer service and order fulfillment, what was working in the business really well, what was not working in the business really well. And they basically told me what needs to be done by me deciphering what they said and then putting that in place. I knew nothing about an e-commerce business. The first e-commerce business that I had that was actually making money, I didn't really know what to do with it, but I worked it out, and with help. So that's very, really important to understand. So if you're buying a business in order to just run it that can also be a trap. That's what we're calling you buying a job. Is that what you really, really want? So it's a bit of a paradox there as well, where a lot of people may have, and this is a massive failing mistake, they might have the belief that they need to know how to run and grow the business, or they need to know the niche or about the niche or something about the niche. But what happens is if you know the niche and you want to do a lot of work in the business, or you know how to run and scale the business, so you're going to do the work in the business, it's a trap because you're becoming an operator and you're buying a job. Typically, most people come to this space not because they want to be operators, right? Typically, they want to buy a business and they want to be the owner, not work, and have that replace their income. So think about it from that level. It's a double-edged sword. Yes, it can be beneficial to know the niche, and it can be beneficial to know how the business works. More beneficial, I would say, to know how the business works and have some skills to be able to run the business, but it's also a trap as well, because then you can get stuck in the business as well. And it's typically when you're in it, it's harder to remove yourself out of it because you just keep your focus in it. Now, I know this for myself because I've done it so many times. So it can be a good thing, but it's a failing mistake that people think that they need to have those certain things to buy a business. And I just don't want that to hold you guys back. So that's why I'm mentioning that. The last thing is advice. This is where a lot of people fail. You know what's actually scary is that the smaller the business acquisition, the least amount of advice, and the larger the risk. And then the larger the acquisition, the more advice. And typically the larger acquisition, the less the risk there is, which is contradictory because, like I said before, the smaller the business, the smaller the risk. I mean, the larger the risk, the larger the business, typically the less the risk. I notice that people buying business under the $50,000 range, they don't really get any advice. And then people above that, they get all the advice. And then, typically people in the 7-figure range, they get far more advice than people in the 6-figure range. And it's unfortunate because typically people in the 7-figure range, they're buying a larger business. They can afford M&A, they can afford buy-side advisors, they can afford M&A attorneys and lawyers, all the different things. And the smaller, you don't really have the money to put into that. But I would dare say that it's more important to have that on the smaller side. Yes, there's contingencies and different things to think about with larger deals, and you do want to have everything checked out. But you can see what we want to do is we want to learn from those people that are acquiring larger assets, that are putting in place the advice from professionals. So if you're starting out at any level, please get advice, get help, get someone to look over the business for you as you're just, scale into the high 6 and 7-figure business. Don't do DD yourself. Start to get professionals to do it for you. I buy a 7-figure business for people, and they're the ones that have me do the DD, right? And it's all checked by CPAs. We also have M&A, CPAs and different advisors, to check all the data, right? And then we go through the process. They have their lawyers look over the contract of sales. They hire me to help them scale their companies. And then we buy more and larger businesses and build out a portfolio because they have all of these people, all these ducks in a row, helping them make the decisions. They don't have to make the decisions for themselves. They have the best people that you hire out to help them make the decisions. So at any stage in business, don't go it alone. Please get help. For the smaller acquisitions, have somebody look over your work, like I said before. And as you scale up and you can afford more of this, then get more help. The more help you get, the better, typically. That's basically it. If you guys do want my due diligence framework, there'll be a link in the description. It's what I use. It's what my clients use. It's saved people millions of dollars. It's made people millions of dollars. It is free. If you want help acquiring a larger asset for me to do it for you, reach out. You know where I am. Sending love.